Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague
Yatin, Mota here. I think Nandita meant bell and she spoke about bell. So that is what exactly happened. The bulls on Dalal Street got slaughtered today. Nandita 400 points down on the Nifty.
400 points from the day's high. I think at the start of the day, we were talking about whether or not the Nifty can come out of that range of 24,100 to 24,350 on the upside. We did attempt at crossing that 24,350 mark. But really failed to do so. In fact, at 10:30 or so, we saw a very sharp turn from the day's high, and the Nifty tanked, almost 300 to 400 points on the day's high. And the Sensex, of course, has ended the day lower by about 1,200 points or thereabouts. Now the question is that since we even broke below 23,900 on an intraday basis, have we, violated crucial support levels? And from here, where do we go? That's the crucial question to ask, because since Friday, we've seen a very good up move. We were thinking that, okay, fine, 24,300, 350 clocked. Now what? We can see higher highs. But given the fact that crucial support level of 24,000 has been broken and 23,900 also on an intraday basis, with I think 23,800 and something, on the lower side, swing lows. Now of course the question is how really we start the day tomorrow, Friday, will kind of give us some clues as to which way we are really headed from here. But Yatin, any particular reason for this U-turn?
I think there is no particular reason. I think it is more to do with the expiry phenomenon. And Nandita, remember, November was a very bad month for equities. We had a big correction on the benchmark indices, and after last 2-3 days of FI buying and some bit of short covering, today was a typical day of expiry wherein the trend of the series stays. So in terms of trend, yes, it's good that we ended almost 400 points lower, digesting that brutal expiry. December series opens tomorrow, and obviously we have 45 new stocks on the FNO which also will start trading because the new NSE circular is expected to come in time soon. 45 stocks already been announced, including Zomato, DMart, Jio Financial, whole host of those stocks. But good part about trade today was that market knew this fact that there could be some correction in the large cap because FIs were unwinding. And despite all of this 400 points decline, fall from day's high, we had the advanced decline ratio which was almost 1:1. So, markets are digesting this expiry. And as Nandita was mentioning, 24,000 is one psychological mark above which again the bulls will try to make an attempt for a recovery, momentum trade. There are various news reports which are suggesting that the Maharashtra government formation will be announced today. Government is also pushing capex. Madhu Kela was there today on CNBC Awaaz. He said that second half, the government spending, the capex, the earnings, everything looks much better than the first half.
That's true. I think he said after 2 quarters we could see some recovery in earnings as well. But 23,873, I think that was the swing low that I was talking about. That will be a crucial level now that will act as a support for the market in the coming days. But of course, it's the start of a new series tomorrow. And if the worst has been digested today in terms of how we fared in November, then who knows, we could see some bit of a recovery in the coming days. But let's talk about today's action then in terms of what the sectors were doing. Of course, you mentioned that broader markets were faring relatively better today as well. Third straight day of broader markets, outpacing the larger peers. IT and autos were the top drags today. IT, of course, there is reason to believe that the Fed may turn more hawkish, may delay rate cuts, or may look at gradual rate cuts. Given the fact that US economy has shown strength, inflation is also expected to edge higher in the wake of Trump's policies. So there are those dynamics at play for the IT pack, which is why that index was down over 2%. Autos also down somewhere around 2% or thereabouts. But Yatin, the good part is PSUs held their ground, right? The PSU Bank index ended in the green. Some of the PSU names, defense names were doing well today as well. Although the Nifty Bank index has dropped below that 52,000 mark today, over 400 point cut coming in there. In terms of individual movers, of course, the list is long when it comes to losers. SBI Life, HDFC Life among top laggards, and of course you'll be explaining what really triggered this kind of a sharp drop in some of these names. Infosys, M&M, Bajaj Finance, Tech Mahindra, some of the other tech names like TCS were under pressure, and gainers, I think there were just 3 or 4 of them today. SBI being one of them, which provided support to the Nifty PSU Bank Index. Shriram Finance was among the gainers, and so was Adani Enterprises. But Yatin, aside of the Adani group of shares that were doing well on the Nifty 500 index, which are the other stocks that you spotted?
So, Adani group stocks are doing well. So, the top gainers in Nifty 500 include Adani Total Gas, Adani Green, Adani Energy Solutions, 10 to 15% move coming in there. But apart from that, we had Honasa Consumer, which staged a recovery, 10% higher for that one. Aegis Logistics, Ireda, HEG, Kochi Shipyard, BDL. So, a lot of these PSU names also are doing well in trade. What was not doing well is after the CNBC TV 18 report, in which we will talk in detail the insurance part. A lot of these insurance players, including SBI Life, were in pressure, down 5% for SBI Life, Max Financial down 4%, Mahindra and Mahindra, stellar launches, good response, but stock witnessed some bit of profit taking, 3% down for that one among the notable names. If you talk about other losers, we had Adani Ports, HCL Technologies, Kims, Escorts, Spark, all of these stocks, hitting, days low when it comes to the stock markets.
All right, those were the movers and shakers in the broader end of the markets. But, on that note, let's take a look at some of the stocks, Yatin, that are on our radar. Consumption names, they are on my list today, but the first one is Marico. There's a Goldman Sachs report that has come out, although the stock came off the day's high in tandem with how the markets were behaving today. But the report is pretty buoyant, right? Goldman Sachs has a buy call on Marico, and they have a target price of 720 rupees, which translates into a potential upside of somewhere around 10% from yesterday's close price. Now, Goldman Sachs believes that Marico is well placed to navigate the current tough environment. You have some of the key products of Marico like Parachute, which are gaining market share despite the inflationary pressures on input costs. In fact, there's been consistent high growth and improving profitability in Saffola Foods as well as digital first brands of Marico. In fact, even value-added hair oils, which remain a weak spot for the company, are no longer. This segment is no longer actually constraining the performance for the company. Of course, the company is facing slight margin pressure due to the impact of higher inflation. Higher than expected inflation in copra prices, because of which the brokerage has cut its FY25, FY26 and FY27 EPS estimates by 2.4%, 1.2% and 1% respectively. Now, earlier in August, the CEO, he was on CNBC TV 18 and he had highlighted his vision for Marico to become a successful digital consumer company. Now, he had also pointed out that 2 of their brands, Beardo and Plix, these were seeing high growth momentum. In fact, the run rate for these companies could go up to 500 crore rupees, Yatin, in the coming 3 to 4 years from the present 200 crore rupees. So that was, one end of the business that the management was betting on. And of course, as I mentioned, the company is aiming to be a digital consumer company in the next 3 years. Food business is the bread and butter for now, of course, for the company, right? And that end of the business has grown 4 times in 4 years. And the CEO back in August highlighted that it is expected to double in the coming 3 years. Company, of course, is expecting double-digit revenue growth from the second half of FY25. Of course, there are signs of rural demand recovery, and which is why I think some of these smaller names like Marico, Dabur are better placed when you look at the larger names like HUL, because of course there is a trend of urban consumption demand slowing down, and these smaller companies, since their business is more rural focused, they are a little they are relatively in a better position than the larger names. And in terms of volume growth also, Yatin, if you look at Marico's volume growth in the second quarter, it was mid single digits, 5% vis-a-vis a 3% growth for HUL. So yes, these companies are better placed, and now with this report from Goldman Sachs highlighting that the company is better placed to weather the tough environment right now, and of course some of these brands that the company has is doing well, giving consistent growth. So looks like, Marico is poised for good growth going forward. Shares are up 20% on a YTD basis, but as rural demand recovers further, we could see another leg up in the shares going forward.
Absolutely. And if you talk about all of these stocks, in the FMCG space, expectation is that there could be a good recovery. But what was not doing well in trade today was the insurance pack. Now, Sources to CNBC told that the regulator of insurance, which is IRDAI, is looking at capping the concentration and the dependence on bank assurance for most of these insurance players. Now, IRDAI is concerned about the concentration of the businesses or the revenues that insurance companies typically get from banking partners. In fact, IRDAI is likely to have asked insurance companies to limit the businesses that they get from banks to 50%. Currently, if you look at companies like SBI Life, it accounts for nearly 95% of this business coming in from SBI. Axis Bank forms 90% of Max Life's bank assurance business, and HDFC Bank forms nearly 80 to 85% bank assurance business for HDFC Life. So, IRDAI really looks at it from the mis-selling perspective. Recently, when the IRDAI chairman was with the finance minister Nirmala Sitharaman, they both were concerned regarding the mis-selling of insurance products that happens in banking branches, and this is something that the market regulator has seen as a concern. In fact, IRDAI could also consider giving insurers a glide path to reduce dependencies on their banking partners, especially for banks who have an insurance business listed on the bourses. So that is the reason why probably market got spooked. Stocks like HDFC Life, stocks like SBI Life, Max Insurance, all of these stocks fell anywhere between 4 to 5% after this news report came in on CNBC TV 18.
That's true, Yatin. These stocks took it on the chin even a day after the FM actually, voiced her concerns about mis-selling and, asked banks to focus more on banking activities rather than mis-selling of insurance products. Of course, a larger part of the annual premium equivalent comes from bank assurance for these companies, so they have been spooked and, really, and of course, the nervousness reflecting in the stock prices as well. But the other stock on my list is once again from the consumption pack. That's Colgate. Yatin, it's given the fact that it had its annual analyst meet yesterday, and the management has highlighted its growth plans going forward. But I think brokerages are fairly mixed on Colgate's plans to drive volumes and top line growth going forward. But let's first see what the company has actually highlighted at the annual meet. They have given an update on the growth strategy as well as the new initiatives that they plan to take up going forward. They want to drive per capita consumption for toothpaste by increased double brushing. Now the key focus area will be on urban markets with the strategy of pushing brushing twice a day. They are attempting to create awareness and improving the usage in rural markets as well, with movements such as oral health to create recognition. In fact, they are looking at a balance mix of volume and price growth as well. As I mentioned, brokerages are rather mixed because they have their concerns and they have their doubts as to how the company really plans to go ahead with its growth plans that it has outlined. Goldman Sachs and Citi both have a sell rating on the stock. In fact, Goldman Sachs has a target price of less than 3,000 rupees on the stock, somewhere around 2,750 or so. They've pointed out that the growth has remained consistent for the company over the last 12 months, and the company has in fact made some progress on most of the key drivers over the last year or so. Of course, several initiatives are lined up, but the softening of growth or category growth in the urban markets in the near term, in line with what's happening with urban consumption, is something that has concerned Citi, because even that brokerage has a sell call on the stock, the target price of 3,000 rupees. They expect earnings growth to moderate in the near term given the soft demand trends. Of course, higher advertising spends and high base as well is likely to impact earnings growth in the near term, according to Citi. But on the other hand, you have Jefferies. They have some faith in the plans that have been outlined by Colgate. They have a buy call and the target price is at 3,570 rupees per share. They say that the company is focused on growing ahead of peers, and in fact they are also looking at segments beyond oral care, which could be a good thing. They are planning to bring more products from the parent stable as well, of course, it has also pointed out concerns over the consumption trends because, on one hand, Jeffries says that where urban demand is weakening, the rural growth is also flattening.
Correct.
That's Jeffries' point of view. But going forward, the fact that it is looking beyond oral care could work well for the company, according to Jeffries. Now, HDFC Securities has also pointed out that there could be a case for re-rating if the company, sees consistent mid to high single digit volume growth delivery in core portfolio as well as improvement in the margin profile. So yes, street is mixed, but let's see how they progress with the new initiatives and the plans pushing toothbrush and oral care in urban as well as rural markets. How what kind of color they yield is something that will decide the future trajectory for the stock. But for now, Jeffries is reposing its faith in Colgate and has given a higher target price and a buy call on the stock.
Absolutely, and Colgate, another FMCG stock. Good analyst day, and I think the kind of market share losses the company made earlier under the new management, a lot of things seem to be improving.
Right, Yatin. Well then, I think we'll call it a day here. Hasn't been a very good one, 400 point slide from the day's high, but let's see what the December series has in store for us, whether or not, despite all the hurdles that we have seen so far in the month of November, whether we can see a Santa rally, coming in December or not. That's something that, of course, we'll be watching out for keenly. But for now, it's a good buy from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening. Okay.